What up traders, what up investors, Ken here from Dyslexic Investor, and thank you for tuning in another fantastic video. Today we're going to be doing the what happened in the market with Ken, and we're just going to be diving into multiple different things. The things, of course, we're going to be talking about. The very first up in front is the Nasdaq sell-off, of course, with tech growth. The yield curve, we're going to be looking at some charts, some historical stuff. We're also going to be talking about GME, and then we're going to be talking about some Workhorse issues or some insider trading now, or some very suspicious, I would consider, options activity that we saw running up into the announcement. With all that in the show, that's going to be pretty much broken up what we'll be talking about today. One thing before we get started as well, we're going to be adding a new comment section within the Discord. If you haven't joined it already, just down in the description below. If you want to ask your questions, and we'll talk about that on air if it's selected through a very rigorous committee process that really it's probably not going to get in. I'm just joking. There's no rigorous anything. It's just my my fat hands looking at it. Anyways. So that being said, Nasdaq, as we're currently speaking at, we're about 30 minutes left into the close. We're down 3.5%, 472 points on the Nasdaq futures. That sucks, especially if you're very heavy growth stocks. Not a fun day at all. And being particularly my trading account, being a little bit more focused on growth, high-end stocks like that, it's not a fun day. And then, of course, my longer-term portfolio it's still down, but it's not on the day, but it's still not as much as on a percentage basis as the heavy growth stuff. So let's kind of just jump into the fun show here. We can look at some information or some data that we want to pull up here, highlighting the U.S. Postal Service deal. Of course, USPS, of course, the United States Postal Service has contracted with, again, Oshkosh Defense to make their new next-gen delivery vehicle, or nicknamed as NGDV, delivering up to 65,000 of the U.S. built over the next decade. The contract stipulation is basically between 50,000 to 165,000 over the next 10 years. So there is some wiggle room there. Of course, this is also going to be not completely fully electric. There's going to be some with combustional engines in there, but with the capacity to upgrade to electronic batteries and so forth. That's basically that much there. Here's the truck. The truck looks pretty fantastic. The biggest thing that I saw people talking about is like, hey, it finally has air conditioning in it and an airbag. Like that I guess the old ones that I see come up to my mailbox, they don't have any of that. Of course, it's going to have sensors. It's going to have all kinds of automatic doors, a nicer, larger cargo bay, 360 camera for security, blind spot monitoring, of course, because most the trucks are right-hand drive like they are in Europe. I mean, in the England. Basically, you have to have a little bit of different parameters around it, because of course the individual has to reach out the window to deliver mail. I don't have to explain how the mail person delivers mail to you guys, but a lot of the interesting stuff going on here without a doubt. Of course, with that news, of course, Workhorse got smacked across the face. By smacked across the face, I mean it got hit pretty hard here. As of right now, it's actually catching a bid. I was just talking to a couple people in the Discord that it's jumping on whatever news. People are buying the dip. Wall Street Bets is going after it. God only knows what's going on there. Of course, this is a very heavy movement coming in here. So with that, we can kind of do a couple things that we saw intriguing that kind of came through via the options market. We saw quite a bit of activity pre the announcement of orders being bought between the 29 to 25 put that morning. So of course, if we go here to a 15-minute chart, that whole morning we had a pretty large gap down for the day, but then we saw a lot of options buying between the 29 and 25 put. Of course, once that news was hit around 1500, aka 3 o'clock-ish, it just dropped out of nowhere. Of course, dropping from basically $28 all the way down to $12.50 within a matter of like 30 minutes. But in that same time frame, it was halted a couple times, I believe twice. So that basically doesn't mean it would have dropped further. But again, that massive amount of bears and market were just kind of really just selling it and really just kind of creating a very panic sell button in the course, because the overall consensus was that Workhorse was going to get the bid for this very large contract, but sadly they did not. As you can see now, probably what we're seeing here is Cathie Wood buying this stock here, or just again the Wall Street Bets folks buying this. But this is absolutely insane. The amount of volume that's coming in here on these somewhat meme stocks. Could it make a reversal? Yes, but again, look how much volume that we saw come in just in the last 15 minutes on here. Of course, it was just halted as well, so be very mindful of that. But with this, looking at the percentage basis, we can look here on the movement from the swing high to swing low. The next level really needs to break is $20.86 and then $23.44, and then really trying to break about 26. Can it do it? Maybe, maybe not. Who knows? But very strange activity going out here in the last 30 minutes of trading here. Of course, the Nasdaq. We can go switch into that one. So I'm sorry. Let's go back to the old Workhorse. So Workhorse, we want to do that showing of the options market here. So if we go to on demand, which again, a lot of people don't know that you can kind of go back in time. So we can go back in time to the 23rd at 9:30 in the morning. So if you go to the daily chart here on this, this is right when it gapped down. So it gapped down. Of course, we know at 3 o'clock, it's going to have a huge move down. But when we looked at the options market at that time frame, we saw a lot of options on this particular Friday being bought between that $29 to $25 level. So just kind of keep a lookout here. I don't think this data is completely accurate yet. Let's see here. So let's just look at this at 1500, 1700. Okay, now the data is loading. So looking at this information here, we can see there's around 1700 at that time frame. So if we go into the time machine here, and I believe it was just right after 10 o'clock, 10 a.m. If it updates, go. It's probably not going to update. It's pretty slow here, this the buffering for this tool here. But the on demand, we saw a jump up of the puts open interest, or the volume on these puts jump up quite substantially. Again, from the 29 to the 30, you can, oh, yep, there it goes. See, the stock has jumped up quite a bit. You saw here there was only a couple hundred here, and that $25 put, there was only 1,200, and then there was already some options buying. Again, it did have that gap down with the overall market, but the large gap down we saw, no, it did not have that. So of course, if we fast forward another hour or so, we can let's just jump into 1140. So keep an eye on that $25 put at the same time. There's a 2,500 options here. Now it's buffering. The system's trying to load. So we'll see on how this option contract is basically already at 300%. But once that data kind of comes through, we'll see those numbers jump quite a bit here. So let's go, still buffering here. There it goes. Still around 2,500. That option contract is still pretty meager there. As you can see, that stock is just kind of moving here sideways here. But then let's kind of fast forward to the 1,500. So 1,500 was it around? Go. Buffering. So we're waiting for the data here. I'm really seeing this kind of come through. So this is when you see that options contract skyrocket here. Basically, this option just blows up and goes super deep in the money, because of course we talked about the price going literally to $12.50 for about a little bit, but it was a very fast a pullback. Let's kind of, sorry this is taking so long for the data to load. See the options contract here, 13. Still loading. It's not making a lot of information to load. So of course we are about 30, so about 20 minutes left of trading here. We're currently looking at, you can kind of still see the official date. Guess we're going back in time and just seeing this this trade play out in this little look back. It's actually kind of fun to do, to kind of look back at certain things and see on how the market reacted and just kind of replay it. It's like Monday quarterbacking, kind of reviewing and seeing on how that works. But again, it's not the fastest system, as you can see here, loading here. But let's try to get this thing up and running. We can kind of come right back. All right, and we're back. Now we're seeing that data kind of come in here. We saw that huge sell-off. Let's go back to the trading tab here. Of course, we're looking for that 25 call option. It's only added a little bit, but you see the percentage that it has shot up here. Because again, currently the stock is around that $24 level, which is not 100% accurate because it hasn't crashed quite as much as we talked about. Because again, it was halted, I believe, at this point. So if we kind of just jump ahead another 30 minutes here, we should see that movement kind of come through here within Workhorse. Okay, now again, sorry, I've been cutting here back and forth. So now you see this option has 3,000 contracts, and it basically didn't really much has really gone. Some people were adding to it, but it didn't really. Not many people got out of it, so it's pretty strange. Seeing it now, it's up 5,000%, 5,163%, and we go to that chart here again. It was been halted here. The chart's not loading yet; it's still buffering. It should be substantially lower, but that is basically the amount of volume that we saw coming into the stock, even though the volume on those particular puts were just being added over time using a bot to track on what was bought at certain times. There was like $50,000, $60,000 options being bought, so forth in that. So without looking here further ado, we're going to be jumping into the Nasdaq. So we're going to next timestamp here, blah, blah, blah. We're going to be looking at the Nasdaq as, of course, the market close happening in about 20 minutes. We're getting super close to that 89 EMA here. We talked about the 89 EMA on multiple time frames here. Again, the Tesla's hitting that. Really think everything is just really just getting ramped here and just very aggressively being sold. Everything's just being thrown out with the kitchen sink. It's very difficult to do anything in this kind of environment, in the sense of just like, do you hold your nose and just hold your breath and just hope for the best? That's one way to do it. If you had cash on the sideline, it's very difficult just to tell you to buy things, but it's okay to nibble, like a couple here and there. It's super difficult when you see the stock market down 4%. Again, this is not a particular stock. This is the Nasdaq is down 4%. So looking here, let's look at the QQQ to kind of give a better representation of this. With the QQQ coming down so hard again, we're looking for that 308 to 309 potentially to be the next level of support to hold. In that same note, we want to see it hold that previous low at 311. And we are getting super close to that. We got into basically to within 25 cents. So with that, again, selling off very hard into the close. Never a fun day with that. And I'm chuckling because, of course, I'm feeling the pain in my personal accounts as well. This is not a fun day. But when is max pain? We never know until it's over. In the sense of really feeling when the sell-off could happen, we can just look at potentially some Fibonacci numbers, moving averages, potentially previous levels of support, and seeing if it holds. Because there is no particular level or button that we can click to stop the bleeding, to stop the pain. You can stop the pain by just taking losses. If what your current positions are, just take them off the table and just send cash. But then you're just kind of waiting to potentially see when you could potentially get back into the market. So without further ado on that, the Nasdaq, of course, coming down really hard here. Again, that I don't want it to go to this level, but the 89 EMA, if it does continue to break that low that we saw 2 days ago, that's going to be the next level we're going to be potentially going to, or that's the next level that it's going to be attracted to. Of course, today's only Thursday. We have one more day of trading coming in tomorrow, so that's also to be to keep an eye on that. With that, here looking on the weekly side for the Nasdaq, of course, we've hit pretty close to that 21 EMA before, but I guess That 21 EMA lines up pretty close to the 89 EMA on the daily chart. So those are potentially very strong moving averages that we just could kind of potentially bounce off of. So that's what we're currently looking for to potentially see somewhat of a bounce, maybe the stop of the bleeding, especially when you're seeing the bleeding come in so strong like this with super red candles like this. This is not fun. This is just pure panic selling. There is no real rhyme or reason. Everyone's just throwing money left and right and just going completely ape, you know what. So on that note, speaking of crazy and people going ape, let's take a little gander over at GME. Of course, this stock had a nice little breakout about 2 days ago again, coming in very strong here. It doesn't do the obvious here. Of course, coming in yesterday towards the close, basically around 3 o'clock again, having a huge break from basically that $54, $56 level all the way up to $200 in after hours trading. Of course, seeing that chop, the halts, the limits, and the limits in the sense of being halted and so forth, and really seeing that chop coming today. Basically, people taking their profits right at the beginning of the open, coming down to that level here. We talk about this. Let's move this to the hourly chart here. That 34 EMA is going to be their level of support initially on the hourly chart. So if we do pull back, we're going to be looking for 108 to potentially hold. In the last hour of trading, looks like we have sold off quite a bit here. We're still up a handsomely 37%. So that's that. Without further ado, that's still a fantastic return here. Again, people, these GameStop meme stuff is just really just throwing so many screwballs and just knuckleballs, and people just don't know how to handle it. It's just really just kind of creating more chaos in the market, which is totally fine. It's chaos over here, but then we're having another large chaos moment of the Nasdaq, and then the interest rates going high. So on that note, we wanted to talk about the overall market. What am I doing here? QQQ. Seeing on how this is going here, looks like we're trying to get some of a bounce here. Is talk about the yield curve. So a lot of people don't know of like, oh, what are they raising? Interest rates, yield curve, what's going on here? So basically, this is a very free, fantastic thing. I can't ping it to you. I guess I'll have to add it to the description. So this is a nice little site. I like to use this actually for the gurus things to kind of see on what CEOs are buying and other various gurus like Warren Buffett, the Berkshire Hathaway fund, basically, and then other course funds like Ray Dalio and things like that. So with this again, being understanding of understanding research and the whole overall macro stuff of the environment here, this red line is basically the zero line in the sense of interest rates going below that. We've always seen a very steep kind of recovery here. The interest rates went to zero, actually, if I can zoom in here, basically like the September-ish time frame. So if you remember what happened in September, we kind of had that very huge little up rare from that. And seeing that kind of market. And again, 2019 seems so long ago. Then, of course, we had the pandemic of 2020. At the same time, the rates were slowly going higher here, and the yields were going slowly higher here again. So what people are fearful about, and why they're just going completely panic selling on a lot of these stocks is like, okay, so if the S&P 500 gives me like 1.5, 1.6 dividend yield year out, this is basically looking at, this is getting fairly close, and it's a treasury yield bond, so it's super safe. So people are potentially going to be taking money out of those growth stocks and then putting it into the treasury yields, like just creating the more of a diversification, taking money out of equities and then putting them into treasury bonds or yields. Looking here a little bit closer here, this yield curve has predicted 7 recessions here. Of course, we're talking about the 1987 one here, which we had that large move down. That was basically it would hit a zero in March, but then once we hit that zero in March, it took a little bit longer until October before we had that really strong move in. The 1987 crash happened, but then we had that. It took a little bit longer for that to kind of play out. And at the same note, seeing it multiple times. Of course, that 2000 bubble, which again, that tippy top in the market here, and just seeing it slowly shrink down and kind of level off here. So this is kind of being what we want to look at in the S&P 500 would be the best looking material here to kind of see on what the flip-flops going on here. So we're going to go here to the monthly. Please, thank you. All right. Sadly, the charts don't go back all the way to that range. I think I can do, let me see here. I can do monthly max available. Yeah, S&P, because the S&P wasn't created, I guess I have to look at something else. Basically seeing that bubble coming in. So we're talking about those yield curves. So seeing that yield curve, of course, in recent memory, we hit that high or the high in the yield curve in basically the summer of 2023. What happened in summer 2023, 2003, that May kind of time frame. Once the yield curves topped out, we saw some of that money coming back into equity markets. Then at the same note, what are we seeing here? We're seeing, again, that's 2003. Then we had that terrible recession in the sense of the housing crisis, on the financial crisis really just getting knocked over the head. And that's February 2010, and then January 2011, and December 2013. So again, then we had very choppy years, if you remember that. I remember that very well because that's when I was getting into trading in 2010 or investing a lot. With, again, we're just going to highlight this time frame. So we're talking about that 2010 here. Again, we did hit that low way in March of 2009, and then made a really strong recovery from that. But then you can kind of see here on that 2010 here, once we kind of hit that tippy tops here, we saw the market, again, that October timeframe we just talked about. 2011 had that really huge equity curve and just really seeing things ramp up. And then on the same note, I believe it was in 13, we saw a little bit of pullback, but nothing to really report then. So we honestly been in this really super cycle ever since then, holding that 21 to 34 EMA. But of course, that pandemic has really rushed things out. So basically, are we in a cycle where, hey, is this going to continue or going higher, or the yield curve is going to catch up and take the money out of those growth stocks and people taking less riskier assets and moving it to other markets? Time will tell, and we'll be doing a lot more research on this. I kind of want to highlight this significantly more. I don't want to be a doom and gloom kind of guy here, but this is it's worthwhile to kind of look at your portfolio and look at that of things. Because again, if you look at in particular ARK got their heads cut off the last couple days. Of course, being very high growth stuff, aka the innovation fund. We haven't seen a pullback like this in ARK in a while. Like, even though they've owned Tesla and other fantastic stuff, this was a lot of selling coming in. Again, there's a lot of reports on Zero Hedge wrote one, a couple other folks did, on the amount of outflows of the fund that kind of came through. You can kind of see here on the volume bar that was pretty significant here. We can kind of tell you that exact number when we go here. We had an outflows of well over 16 million. So again, the number they threw out there was like well over billions of dollars that people pulled out on that particular day. And then we're still seeing that trend kind of continue lower with the innovation fund. So again, looking for support potentially around that 89 EMA. That 89 EMA has been pretty daggone on point with so many pullbacks here recently. So be super mindful about that. So on that note, I know I rambled for quite some time here. I really do apologize. Hopefully you found something interesting in this video here. Well, we are doing a live stream tonight, so hopefully we'll see you there. We'll be talking about some tickers, mostly going to be talking and feeling our sob stories about the money that we lost today. Just joking. We could do that too if you want to, but more being optimistic and looking into down the road and looking for some new opportunities. So without further ado, I want to thank everyone. Have a blessed day. Catch you guys on the flip side. Peace.